Hello everyone, welcome. So today's going to be a bonus video. I wanted to bring up the FOMC meeting that's going to take place tomorrow. So the Fed has been raising rates for about almost 15 months as of last month. They just paused last month, and the predictions that the economists are making for tomorrow's FOMC meeting is that the rates will be hiked by another 25 basis points. The current is 500 to 525. The prediction is almost unanimous by economists that it's going to be bumped up by a quarter point. So why am I bringing this up? Well, there's a few things that I want to talk about. So the first thing is, as you can see, the Fed funds rate has been increasing massively over time. So March of 2022, it was basically zero. And then it shot up in a straight parabolic line because inflation was at 9%. And well, it was at 9% in June, but the Fed started raising rates in March before it peaked out. And so they want to get inflation under control. Now, here's my prediction about what I think is going to happen with the FOMC meeting tomorrow. I'm actually pretty bullish on this meeting. Here's what I mean by that. So the economists think that this thing is going to be increased by 25 basis points. I do not think that there's going to be an increase tomorrow. As a matter of fact, I think what's going to happen ultimately is that there's going to be a pause. There's a few reasons I say that. The first reason is the Fed paused last month. It was the first time that they paused in 15 months. And the CPI release that came in most recently was more bullish than the last time that the CPI came in, and they paused on the previous news. So that's the first thing. Second thing is inflation dropped by 1% year over year on the last CPI release. And core inflation, which the Fed has been mostly concerned about being sticky and not coming down, dropped a whopping 0.5% on core inflation year over year in just 1 month. So that's absolutely massive. That's extremely bullish. Inflation continues to head in the direction that the Fed wants it to. Now, could I be wrong about my prediction of what the Fed's going to do tomorrow? Absolutely. I could be wrong. But I'm playing this both ways. It doesn't really matter to me whether the Fed raises rates or not. I don't think they're going to raise rates, but it could happen. Markets are all about game of probabilities. Sometimes things work out, sometimes things don't. But if the Fed raises rates tomorrow, I honestly don't think it's really going to affect the markets too much because big earnings is all this week. So I think that the markets are more concerned about the earnings portion than they are the Fed. This has already been calculated in for weeks on end now. So it's been pretty much synonymous that the Fed was going to raise rates for like almost looks like about a month now. So the market already knows about this. They don't really seem to care. Markets are still going up anyways. So my overall game plan here is if the Fed raises rates and earnings are good or bad, I still expect the markets to go up. If the Fed does not raise rates and they pause like I think they're going to, and earnings come in mixed, I expect the markets to take off to the upside and the S&P to move from 4,600 to 4,700 as soon as maybe by the end of the week, possibly even by the end of tomorrow's trading session. And if for whatever reason the markets don't like any of it, let's say the Fed raises rates and earnings come in bad and the market sells off, then I still intend to buy the dip on that. So if markets go up, I'll sell for a profit. If markets go down, then I buy the dip and get shares on the cheap and get more passive income for it. Anyways, just a short video. Please comment, like, subscribe, hit the bell notification, and I'll see y'all later. Peace.